Analysis from Julia Lee at Bell Direct. Now, Julia, good to talk to you. And the Aussie market ending higher for the week.
Brady, we saw a gain of 0.9% today, and that was enough to put us in the black for the week. For the week, we managed a gain of 0.5%. We have a look at the sectors which led the climb. The best sectors for the week were the consumer staples as well as the material sectors. On the flip side, though, the worst sectors were information technology as well as energy. Now, today on our market, we once again saw consumer staples leading the gains. This time it was because of Wesfarmers. Its first quarter sales impressing the market, and its stock was up by 6.9%. But the worst performing sector on our market was the energy sector. We saw oil prices slightly lower overnight, but also Woodside Petroleum down by 1.8% after its quarterly production report really dragged on that particular sector. If we have a look at where some of the big movers were today, we saw Macquarie Infrastructure Group down 7.1%. There are reports that its largest shareholder has sold a 10.8% stake in the company at a price of $1.40. So the shares dropping very near that $1.40 mark today. We also saw Aristocrat Leisure sold down heavily, and that was after its US court case. It looks like it's lost that court case and it's going to have to pay out damages. So Aristocrat Leisure was actually down by 5.4%. On the flip side, we did see Elders doing well today. Its stock was up by almost 8%. That was on the back of a broker upgrade as well as some bullish forecasts for wheat in Australia. But altogether, a pretty good day for the market, really following on that from that positive lead that we saw from Wall Street.
Now, Wesfarmers was one of the best performers, as we just saw a glimpse of there after that first quarter sales report. What did you make of the report, Julia?
Wesfarmers did extremely well, and it was all on the back of that first quarter report. Now, earlier on in the week, we actually heard from Woolworths, and if we have a look at their food and liquor comparable sales, it was up by 5.8%. Now, Wesfarmers actually beat that result, and if we have a look at Coles and their comparable sales, we saw a gain of 6.1%. Now, Wesfarmers is coming from a bit of a lower base than Woolworths is, but still the market buoyed by the fact that Wesfarmers, its Coles business, seems to be making up some ground on Woolies, and that was the main driver. Also, if we have a look at their hardware business, once again looking pretty strong. We saw growth of about 15% there. And if we have a look at that hardware market, back in 2001 it was worth about $24 million, and now that hardware market is worth about $36 million. So we've seen about 50% growth in the last 8 or 9 years. If we have a look at some of their other businesses, though, Kmart still continuing to come under pressure. Comparable sales down by 2.3% there. And with their Kmart business, I guess they're trying to slash out their unprofitable sales areas, so really concentrating on that. Officeworks, so having a good quarter, up by 12% in terms of store sales growth. And with Officeworks, they're also looking at growing that particular brand. They're looking at rolling out 8 to 10 new stores every year. Target also a slight increase there. So overall, the market pretty impressed. If we have a look at Wesfarmers' share price, this is in 2009 so far, you can see that its shares reached a 52-week high today. So a huge surge in their share price, up by almost 7%, and one of the best performers on the market today.
Now, Sydney Airport also did well in the third quarter, and that certainly helped share prices for MAP today.
We saw Macquarie Airports having a good day, and that was after its third quarter results. It released the results for the 9 months up to September as well as the third quarter. And the good news is that momentum does seem to be building in their business. Now, it is off the back of stronger passenger numbers coming through their airports. In fact, if we have a look at Sydney Airports, where it's a major shareholder and it is their major investment, Sydney Airports in the September quarter actually saw total passengers up by 5%. If we have a look at their results and their quarterly results, that's reflected in the third quarter results as well. Now, in the 9 months up to September, we actually saw EBITDA up by more than 3%. But then in the third quarter, we saw it jump by about 6.3%. So the third quarter looking increasingly strong. Hopefully they'll be able to retain that momentum, and the share price up by 1.4% today.
Yeah, very good gain there. Julia, I just wanted to ask you finally about some other news that we had out after market close, something that we've been waiting for. Yanju Coal, of course, back earlier in October, resubmitted its bid to buy out Felix Resources and to FIRB, to the Foreign Investment Review Board, that application for $3.5 billion to take over the coal miner Felix Resources. Just wanted to ask you, now that the federal government has come out and approved approved that bid, obviously with a lot of conditions. What does this mean for Felix Resources? Some of those conditions, I'm just seeing obviously that the Yanzhou stake in Yancoal must ultimately be below 70%, that an ASX listing to be the first China state-owned entity here, that Yanzhou must market coal at arm's length and also must list on the ASX by the end of 2012. So a few conditions there. Also, of course, that the headquarters needs to be in Australia, the CEO, CFO in Australia. What does all this mean, I guess, for Felix? A lot of heat in that coal sector, isn't there?
I guess it's been a long wait for Felix shareholders as well as for Yanzhou going through the Foreign Investment Review Board, and no doubt that a lot of smaller mining companies will be watching this very closely, as will China. There's been a number of companies applying to the Foreign Investment Review Board to enter into deals with Australian mining companies or Australian resource companies, and I guess some of the conditions have changed. So companies wanting to take up to a 15% stake are generally not having much of a problem as long as it's below a certain threshold. But it's when companies from offshore are trying to get a majority stake in a business where they run into obstacles. So it does look like Yanzhou has managed to come through. They'll be able to take up to a 70% stake. It does look like Yanzhou will need to list on the ASX by 2012, which should be an interesting development. So Australian shareholders will be able to get a stake in that particular business. But it does look like there are a number of conditions imposed, and the news has just come out. So I guess it will be digested within the next couple of hours.
Sure will be, and then we'll see the reaction next week, no doubt. Julia, we do appreciate all your analysis this week. Thanks so much for that. Have a great weekend. We'll see you Monday.
Thanks, Brady. You too.